So I think by and large it's a non-event, and probably one of the striking phase of this policy was when the governor said that they don't track US Fed, and this is what I was saying when I lost the connection. And while the governor can't really come and directly say that we track the Fed, but as an emerging markets, we have to have a kind of linkage with what US Fed does. And we believe when the rate cuts happen, they will quite likely be in a similar zone as when Fed starts cutting the rate, just like when the rate hikes happened, they happened quite in cohesion with when Fed was hiking the rates. Having said that, on the markets front, I don't think the markets are really hanging on to RBI rate cuts right now. The other things, the fiscal policies in the play when it comes to the longer end duration play. So I believe it's a non-event. It doesn't change anything. The yields still seem like coming lower, and RBI's rate cuts will most probably come quite similar at the same times when Fed's rate cut come. And probably one second thing that stands out is when RBI governor mentioned that they try to maintain the overnight rate close to the repo rate, which is quite surprising because the governor mentioned that in the policy somewhere they have shown the data, because the data that we see is that overnight rate has been quite volatile and it's not been close to the repo rate. So a couple of interesting points where RBI governor has diverged from their usual monetary policy statements, and probably a little bit of justification of how they have seen markets probably giving feedback to them. And looking at that, it will be interesting to see read the whole monetary policy data points that RBI shows in the MPC detailed note.